Central showed that soured loans soared by 83% to more than 479 billion pesos from 262 billion pesos in the month of May 2020. Month on month, bad loans increased by over 3% from April 2021. The NPL ratio in May stood at 4.49%. That's higher than the 2.43% ratio during the same period of last year. The May reading matched the 4.49% ratio in June of 2008 and was the highest since the 4.52% level in September of 2008. Now, economists say bad loans may increase in the coming months. That's on the back of muted economic activities as well as elevated unemployment. Bangko Sentral Governor Ben Diokno had earlier said the NPL ratio could exceed 6% this year. This prompted the BSP to closely monitor the financial performance of highly vulnerable banks. Borrowers were given reprieve through loan payment extensions under the Bayanihan laws. The relief measures expired in June and December of last year. Now, the country's trade deficit widened more than expected year on year in the month of May. Now, month on month, though, the trade deficit in May narrowed less than economists had expected. You can see on your screens here, that's to the tune of 2.76 billion US dollars from just around 1.31 billion US dollars in May of 2020 and the 3.71 billion in April 2021. Now, year on year, exports grew but still missed the expectations, marking a growth of 29.8%, while imports rose by almost 50%. Electronic products continued to be the country's top export in May of 2021, while also accounting for the highest import value among the commodity groups. Meanwhile, the country's factory output continued its rebound in May. The volume of production index surged to 265% year on year in May of 2021. That's a reversal of the 73% drop in May of 2020. That print is also higher than the revised 155% annual increase, which was recorded in April. So far, factory output growth has averaged 1.1% this year. 18 of 22 industry divisions posted year-on-year growth in May, led by the manufacturing of coke and refined petroleum products. May also marked the second straight month of growth in manufacturing output following 13 straight months of aid contraction. Okay, guys, let's see how the peso is performing amid those trade figures. Again, to reiterate, the trade deficit narrowing less than economists had expected in the month of May. We were hoping economists had believed that would be narrowing a little bit more, and you could see that on my terminal here. The estimate was actually negative 2.621 billion, and that has narrowed to 2.775 billion dollars here. But nevertheless, that is still, of course, narrower than what we were seeing, which was above $3 billion of an deficit in the month of May. So what is the culprit here? The imports rising lower than analysts had expected, and the exports as well rising lower than the analysts had expected. And you could see actually our peso here trading at 49.88 to the greenback. Again, we have been hitting an 11-month weakness for the peso. But what Diokno has been saying, is of course the governor of the central bank, is that it's really the supply and demand determining the peso dollar rate, and that participating in the market for the BSP is really only to minimize fluctuations. He did say that the peso is tracking other currencies' weakness, and he says that means that the dollar is the one strong, not necessarily that the peso is the one week. Now, I'm just going to open my terminal here and take a quick peek at the banks after those figures, of course, of increasing soured loans. And you can see the banks hard hit here, down by 0.3%. But you do have some bright spots here. East West up by close to 2%, followed by BPI and Union Bank. Now, let's open the index here and see how we are trading. A bit of weakness here, opening on the back foot, down by 0.8%. breaking that 6900 levels we were staying above for a couple of days here, and this comes even as foreign selling or net foreign selling has slowed, and you can see that on my terminal here. Quite a volatile picture. Some days green, we were hoping for that to continue, but it does appear that we did have quite some net foreign selling, but still the 5-day moving average has slowed to $1.63 million of a net foreign outflow. That's compared to the 20-day of, get this, $14.9 million of an outflow per day. That's, of course, according to the stock exchange. Now, speaking of more debt, let's take a look at one stock in particular. I wanted to see San Miguel here. They have just listed 30 billion pesos in bonds here. That's a 6-year bond carrying an initial interest rate of 3.3832% on a PDEX. That is the 11th PDEX listing this year. You've actually got total tradable corporate debt at PDEX now at 1.42 trillion pesos. This is the largest bond listed by a non-financial issuer on the local exchange. You can see on my terminal, San Miguel's debt to common equity hitting 300%. As of now, at least as of March 2021, total debt to total assets at 54%. Now, here to chat with us about all of these developments and more, we have with us Tina Ulang of First Metro Investments. Good morning, Ma'am Tina, and welcome back.
Hi, good morning, Danny. Nice to be here. Happy to be here.
Ma'am, let's talk first about the index. And this, we broke through 7,000. I think that was just for one day, 1 or 2 days maximum. And then, we're back below the 6,900 levels here. And this comes as we've been barraged with quite a lot of data. You have inflation actually, rising weaker than expected, but still above target. You have expansion when it comes to PMI. Now you've got the trade figures, wherein imports are disappointing and exports as well. Tell us, what are the economic data and figures telling you, and how is this affecting the movement of our index?
Mm-hmm. Yeah, we were hoping that the PSA will stay above 7,000, but apparently some information about the vaccination is on top of mind among investors, and that's really the lack of vaccine supply and the delay in the arrival of some. But this is very temporary. Now, with regard to the economic data, actually, the peso depreciation is concern. But it is not to be taken negatively. It should not be taken negatively because this is really something that is reflective of what's happening. We are vaccinating and the drive is picking up, and we are slowly moving into reopening, and therefore factory activity is upbeat, and that's a reflection of demand for dollars, and so people are buying dollars, and again it's a reflection of more importation, more capital goods importation, raw materials, intermediate goods that are necessary for manufacturing. And factory data, as you reported, has been upbeat. 2 months up after 13 consecutive months of decline. So hopefully this data get registered in the minds of investors, and the vaccine supply arrives, and we can continue with the vaccination and proceed with the slow reopening of the economy gradually but safe. And hopefully that's going to be the main catalyst for the stock market to rise above the 7,000 level.
Ma'am, let's talk about the net foreign buying or selling. What's it gonna take for foreigners to come back in, especially if you're mentioning that the peso is getting weaker? Is that actually incentive for them to be buying in? Another point here, you've got PSE President Ramon Monzon saying we need short selling for foreign investors to come in. Is this a good time to be having short selling with so much volatility? The option basically to exit quicker, and not hold stocks long term.
Mhm. Now, with regard to the appetite of the foreign investors, they've been out of the country last year at 2.5 billion in net foreign selling. This year is about 1.5 billion US dollars. We've seen a very small spurt after the MSCI rebalancing last May 24, inflow of about like 159 million US dollars. And that was the time when the PSA hit a low of around 6,164, and that put the PSA's PE at 15 or 16. So every time there is a very undemanding, very cheap valuation, the investors notice that and they come in. They
Come
try
in.
to
Okay.
especially the active funds after the passive funds have gone out. MSCI rebalancing, the active funds notice it and they started accumulating blue chips, which propelled the PSA in a month's time we were up 4% in June. And I think that's a signal that we are still in the radar screen of the big foreign houses, big
Okay.
investors outside, but it will just require that certain conditions be met, and one is valuation, but that is not enough.
Mm.
What's happening now in the US is that there is a Fed taper there, but the Fed has backpedaled on that. It elicited a knee-jerk reaction, foreign selling in Wall Street, but suddenly there is again risk on appetite because the Fed taper is going to be done in small steps, and
Okay.
there is actually also a very strong appetite for US fixed income. The 10-year rate has gone down 1.4%, coming from a high of like 1.7%. So these external conditions are impacting on us. Now, with
Short
regard
selling.
to the short selling, I think this just completes the full product offering of the local market, which should make it competitive with the rest of the world. So we are trying to step up, level up to the best practices of the global market. Whatever what plus the consequences of that, it may lead to greater demand for Philippine equities because we are on par as far as product offering and ability of foreigners to get in and out and take advantage of the market is concerned. But it may also generate volatility because we are in a very weak situation now, pandemic and slow vaccination.
Okay.
We have yet to reopen compared to the other economies of the world like the US and China.
Okay. So expect some volatility here, but it's something that must be done to attract investors and be on par with the rest of the other global markets. Ma'am, let's talk about gambling stocks. These were on the radar yesterday. It seems to be paring back down. Bloomberry down by 1.3% after surging by I think more than 6%, 6.5% yesterday. Tell us, are these comments of President Duterte, do they have teeth? Will this have any impact on these companies moving forward, or is this just a knee jerk reaction? So, investors hungry for something to put their money in.
I think the timing was very good because we're having vaccination, is picking up, and there's a reopening. So, what can you expect to be the next move? Given the fact that we need more taxes, we need more tax revenues to bridge the budget gap, which is like expected to be like at the 2 trillion, 2
Mm.
trillion or 9.4% of GDP. um, and that is something that is kind of worrisome because we need to really take care of the budget deficit. So we need to generate more taxes. We've just lost 100 billion because of create because of that
Yeah.
incentive. So we are having like PIFITA, which is the financial passive income and financial intermediary taxation act, and we're going to have zonal values revalued under the
Mm-mm.
property taxes under train package 4. So this message from the president seems to imply that the regulatory environment is going to be friendly to gaming. And if it
Okay.
becomes so, then we can have benefits arising from that in the form of more tax revenues.
Okay,
So
so
I
something that
think this is
actually,
very
has
encouraging.
structural implications, not just a knee jerk reaction on the reopening. Ma'am, finally, Double Dragon JFC, what REIT possibility here? What's the rationale of this, and how would this compare to Double Dragon having already its own REIT and JFC investing its own land and its own cash into what you call central hub? And that IPOing in 2022. Why would this make sense for Jollibee, for example?
Mhm. I think Jollibee is in need of a lot of resources, a lot of cash. It has done a lot of fundraising in the past, and I think the goal is really to tide it over this difficult period when you don't have an economy that is fully open and the business is weak, and it makes sense for them to have a lot of resources, lots of cash, and they're taking advantage of this new instrument which is street. So they're trying to be creative and putting assets, real estate into this vehicle that they're putting up, and so they're able. So eventually they can have money flowing into the company to be able to finance their expansion, because they're expanding abroad and they have changed some kind of a shift in their strategy when they are more interested abroad, because the global pandemic is well managed in some parts of the world, and it makes sense for them to go aggressive in the US, in the Middle East, in areas where the pandemic has been managed well, and economies have fully reopened. So this is they're trying to build up a war chest by
Okay.
this REIT, which is very a good instrument now, and very the appetite for it is very strong.
But ma'am, what's the rationale? Why Double Dragon? Why can't Jollibee just create its own REIT? It doesn't have its own property company, but why put your own real estate assets into another property company as an investment, and then that spinning off?
Mm. I think it's a question of competence, a question of local market knowledge, and a question of asset concentration. So it seems that Double Dragon would have the local knowledge, would have the expertise, and would have the strategy and the vision for moving towards this greater exposure to property and becoming involved in these more creative instruments like REIT. Whereas Jollibee is more on the food service, and the brand is known as being involved in food service, so it makes sense to shift the resources to the entity that has the name recall and the expertise, local knowledge, and that would be Double Dragon, I think.
Okay, very interesting there. So instead of keeping their assets, in land and just sitting there, allowing a Double Dragon to manage the street for them. Thank you so much for all of these insights. That was, of course, Tina Ulang of First Metro Investments.
Thank you.
Here are other headlines we're keeping our eyes on. The World Bank has issued an apology to the Education Department after releasing its supposedly outdated report on the Philippine education system. In a statement, the global lender admitted that the early release of the report was an oversight. That's because it did not allow the DepEd a chance to provide inputs on the study before its release. The issue has also prompted the World Bank to temporarily take down the report on their website. The bank added that it had already reached out to Secretary Leonor Briones to continue its dialogue with the department regarding the country's education sector. Now, around 10% of MSMEs have closed as of June. That's according to the Department of Trade and Industry. Trade Secretary Mon Lopez said the agency's survey, covering over 33,000 respondents, showed that only 44% of MSMEs were fully operating as of June, while 46% are partially operational. Now, back in May, the percentage of closed MSMEs were slightly higher. That was at 16%. Lopez said MSMEs also reported a decline in sales due to the pandemic. In particular, almost 54% said their sales were down last month. That's lower than the 90% which experienced a drop in July last year. And that's a first look into the business day. Today is Friday, July 9, 2021. Catch Business World live for the market closes at 3:15 p.m. today. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.